Well, hello folks, I'm LA Little and this is your weekly NeoTA wrap, where we take a look at these markets and we do it from a neoclassical perspective each time, asking ourselves what happened last week, what does it tell us about the coming one. I do this show every Sunday night, broadcast at or before 10 o'clock Eastern Time, archived on YouTube under the channel LA Little. Check it out there, subscribe, and anytime content's pushed, you'll be notified. I want to start this show tonight with the major market and sector qualified trends. And the reason for that, let me pull this over a little bit so you can get just a second here. Let me get it lined up right so you can actually see what's what. Is if we look at the short-term trend, we're starting to see that kind of degradation that takes place anytime we get any kind of a decent pullback. You got a bearish trend here, sideways trend there, so that's the S&P and the Dow Jones, which are the weaker of the indexes. If you look a little bit farther down, you pull up the general market sectors, you can see some bearish coming in here as well. Consumer staples, industrials, basic materials. So you got three that have already changed. And then if we go farther, you got a sideways trend here, sideways trend there, another one here, another one there, and you've only got a couple bullish ones left, healthcare being the main one. So what's happening? This is turning more bearish. Now we haven't really got that over here yet other than energy. It's the only one that's gone bearish. We still have utilities trying to go lower, and we've got the consumer discretionary that's also sideways, even though this one is kind of an aberration. I wouldn't count it. So really you have 1, 2 over here. This is the trend you always have to worry about if you're an investor. So what's happening? Weakness here. If this weakness goes on long enough, it will start to affect there. So the question is it going to go long enough? What happened last week? Well, big drop again. We're back to even on the listed issues, back to about 3% on the NASDAQ and small caps, 2.5% losses across the board. And what's the deal? Well, it's the same thing we've seen for a while now, and that is that we have a topsy-turvy, up and down type market. We saw this back, as a matter of fact, if we go back farther, we saw this in December, run up, run down, up, down, up, down. Finally, we even talked about it. What would change this would be a partial pullback that then broke out. Once we got that, we were expecting an ABCD structure to take us up to here. Fell short. We come all the way back, we test those lows, we go back, we try to do it again, falls short. Another week down. Folks, does this look anything like that? Yeah, it looks about like the same thing, doesn't it? Up, down, up, down. I expect we're going to get more up, down. And the thing that's going to change this is going to be, again, one of those pullbacks that either doesn't lift much and gets an ABCD structure of a downside, or goes back to the top, comes down just a little bit, and then gets the breakout. Which is it going to be? Well, right now, this is the more likely case because we're getting a small bounce on low volume. We will see which one it's going to be, but right now, one thing is clear. ABCD structures are not fulfilling. Projections are not being met. Stocks are bouncing up and down. If we come to the weekly, which is what we try to focus on in this particular show, you got takeaway bars on a weekly basis, taking away all the goodness of that spike up and replacing it with the badness of a spike right back down. Anytime you get that kind of action, that usually tells you, hey, neither one of these sides, I guess we could call them, are in control. In other words, the bulls, the bears, the buyers, the sellers, neither one are in control. You go up, you come right back down, you take away everything that you'd built the prior week and you give it all right back up. And where does it come back to? It comes right back into this support zone, which is kind of the key zone. It's where you would expect it to stop, which is what we had here. It's where you would expect it to stop, but you know, as you chew away at that more and more and more, you typically tend to get the break. And if you think about a break, what do you have down here? 2 swing point lows on the weekly time frame, gathered at about the same price point. That could be some damage if in fact we come down here and start to take them out. That's the S&P 500. That's how it looks. Dow looks almost exactly the same, so nothing really to cover there. So if we pull over and look at the strongest of the indexes, that's the NASDAQ, the NDX, and the Russell. We'll start with the NASDAQ. Had a swing point high here, got over it, gave it right up, could not hold the retest regenerate zone. That break right there is a pretty good key that, hey, we've got some problems. What does it do? It goes right down into that low, tests into that low, gets underneath it, false moves leads to fast moves, you get a little turn, spike back up. You're trapped in a range, right? Basically, you're in a range here, and that range below it and above it, that's what it looks like. Key is here. If you fall under it, you're going to come back and you're going to try to test into the lower range. That lower range is all the way down here, and I need not tell you that you're going to have swing points down here. There's a low right there, another one here, and another one there. So 3 of them lined up together on the NASDAQ on the daily. In other words, if you get the ABCD structure to the downside and if it can push down, it's going to come down into this zone, get close to these swing points, and potentially start to create some problems. That's on the daily. If we move it to the weekly, what does it do on the weekly? The same thing we just talked about on the S&P 500. Does a takeaway bar, comes all the way back, takes away all the goodness, and what is it doing? It's coming back in to do a retest regen on that prior swing point high. That high, top of it was 48.15 roughly. We closed 48.91, so we're not all that far away. Got as low as 47.57, excuse me, 48.14 or 48.15. We got as low as 48.25, so we got within about 10 points of it. So 10 points away from that test. It does look like it's going to try to do that test, and that's after what looked like what? An ABCD structure to the top side that cannot get going, immediately comes back and falls right back into it. Right, it had broken over it right there. It looked like it was going to try to go up last week, but instead the failure. That's the NASDAQ. NDX is going to be pretty much the same, just a little bit weaker. So same sort of thing here, false move underneath that low, back up over it before the week is out, takeaway bar, and it's already doing the retest regen on this particular index. If we move to the Russell, which had been the strongest, the Russell, now remember, the Russell had already done ABCD structures to the upside and actually completed them, and had a nested one that it was trying to complete and did complete. The only thing it didn't complete was a weekly that pointed up higher. That one failed. You get the big takeaway bar, right? Not so much a takeaway, but a downdraft bar. Now you get a little spike back up into it. You're doing a retest regen on this prior high. You got underneath it one bar and then back into it, so you kind of saved the day on that one right now. Big test is, can this one crawl back up to the highs and get over these highs again? Right now, it's kind of hard to think that. If we look at it on the weekly, it's not quite a takeaway bar, but almost. The key test here going forward, if there's any doubt as to whether this really is a breakout or not, it's going to be resolved if this thing gets back inside the range. It's not there, but that's going to be the key if in fact this market is going to trade lower. So that's kind of the way the indexes shape up. If we move over and look at some of the other things, we'll see some issues there, and we'll be right back to look at those issues together.
If you are serious about trading, TA Today's Tools is the perfect service to help you reach your trading goals. Go to our homepage and click Use Our Tools. Here you will find an overview of this amazing service we offer to our clients. One of the tools you will have access to is the TA Today charts. These charts visually map all the neoclassical concepts that LA writes and teaches about, and is the perfect charting service for neoclassical traders. Learn the trend of a stock you're interested in and see this stock on all 3 time frames. To get started with a free 2-week trial, go to our homepage, click Use Our Tools, and then click the free trial button.
So as we come back here, I've got the IYT, which is the transportation index, and this particular index is it's an interesting index in that it is part of the Dow theory, which somebody asked me about 3 weeks ago. And even though I don't subscribe to that theory, you know, it does make sense from a logical standpoint in that whatever you have created has to be moved around. And so the transports and the industrials should go together. Now, those indexes have changed quite a bit. In particular, you know, when the Dow theory came about, it was the rails, and now it's you know, it's airplanes, rails, and the trucking industry, which back in that time didn't exist. But in terms of the transports, one of the big components of it was the air delivery. You know, that's different now, is the air delivery, of which is delivering both people and product, right? Where, you know, we're moving packages around with UPS and FedEx, but we're really moving people around for the most part still, and that doesn't really fit into that Dow theory. So, you know, there's a few warts on it, I guess is what I'm trying to say, but at the same time, it's still an important index. 2 swing point lows, you come down, you get close to them, but you don't break them, right? That's an issue. As it comes down, it starts to get a bounce. There's the potential that this thing's going to set up some sort of an ABCD structure to break these guys out. Now, it wouldn't be so bad if it was only on this time frame. But what we're starting to see is we're starting to see a few of these indexes, or excuse me, these sectors, set up the same sort of idea on different time frames. In other words, a break of those lows we just looked at is also going to be a break of the lows on the weekly time frame. Now, when you start getting breaks on multiple time frames, it gets a lot more dangerous. And if we look at this structure, right, that range would take you right down to these lows, potentially, if it breaks and breaks under here. And if it does break under there, the odds are pretty decent that it will try to carry. Given that, if we're looking at the Dow transports, and if we're considering the Dow theory, lower lows is one of the things you need on the transports to start to break down that Dow theory and to say no longer is this an uptrend, but it's a downtrend. Again, I don't subscribe to that as a hard, fast rule, but if this does start to break down, one has to wonder if something really larger is going on. So that's the transports. That's another one of those indexes that's getting ready to try and break down. And there's another one that's set up just about the same way, and that's the staples. Now, you wouldn't think the consumer staples would be the one that's going to break down if we're looking at the end of a market, right? Because typically they do better at the end of the market, not worse. Swing point low here, another one there, another one here. Gets a bounce up, trying to do an ABCD structure up, but you could also count this as an ABCD structure on the way down as well. In other words, you got an A, a B, a C, potentially a break of these swing points. If I move it to the weekly, 2 swing point lows laying down there at these lows. In other words, if you break on the daily, you're probably going to break on the weekly as well. That 2 would take, just like we looked at on the transports, that 2 would take this down into another level down, and we start to see, you know, this sort of, you know, cascading down on a weekly time frame. If we go back to that sector trends, qualified trends, if you start to break down on this time frame, right, the intermediate term time frame, and you do it long enough, eventually you're going to affect this, just like if you do it long enough here, you're going to affect these. Well, you do it long enough here, you'll affect those. Now, we're a ways away from this being affected, right, on a large scale. Almost everything here is still bullish, all but one. Energy is the only one. Energy, maybe it's the red herring, maybe it's actually, you know, the canary in the coal mine. I don't know which one it is. but it's the only one that's not bullish on a long-term time frame. But as these start to break down, if in fact they do, if we see staples begin to break down, and if we see some of these sideways start to break down, and not so much that one, but the other one that's here, this one's already bearish. This one in particular, the utilities, and then particularly the staples start to break down and go sideways. If we start to see these things break down, start to go sideways, and the industrials are not that far away, then we're actually going to see more and more concern about what the longer term trends actually hold. We're a little ways away from that. It's going to take a little while, but you know, if you're going sideways, you're not going up, you're setting up the structure to let you go down, and let you go down a lot harder than you otherwise would. Here's those industrials I was just talking about. You can see the swing point low here. It's not all that far away. The other thing I want to point out, and it's apparent both here on this particular chart, but it's also apparent on the S&P chart, of which we'll go back to here in a second. And that is that you got three black crows, and I don't know if you follow candlestick charting, but one of the things in the candlestick charting world is that when you come off some sort of a rise and you get black candles, and in this case mine show up as red or blue depending on if they're anchor bars or just down days, but there's three bars that you close at the lows and they're dark, right? They're colored. Those kinds of pushes down, right, typically is the sign, a potential sign of a turn in the trend. Now we're on the daily, so on the daily it's not that easy to look at this and say, okay, you know, this is going to continue. We've seen these patterns before not signal a turn, but again, it's something to look at. You see it here on the SOX. You also see it on the index. 1, 2, 3 on the way down, 3 black crows, and usually, you know, the way these set up, even if they're a turn, you'll get a rise almost back up to test back into those guys before you fall. So in other words, you could get a test all the way back up into this area here and it still be the pattern, and then you get the drop. So something we'll watch. Right now, again, it's just an observation of what's out there. I want to come back and finish this up for tonight. I don't have any questions this evening. I've been out, you know, all last week. Other than Monday, I was on some personal business. So now that I'm back, you know, if you want to send emails in, ask questions, you know, I'm always open to that. Just pop over here, come to NeoTA TV, click on it, and down here you can see about interactions, how you can interact with me on this show. We'll come right back and we'll finish here with the final thoughts. One of the things that's hard not to do is to look at the trend, you know, on a short-term time frame, and to think, okay, this is the end of the world, right? And one of the things we do with the TA Today charts, and I'm not going to try to line them up here, but we have a daily chart, a weekly chart, and a monthly chart that all show up, right, on your screen, and they show up across the screen, so you see them all at the same time. And it's a powerful thing because one of the things it does for you as a trader is it allows you to have that perspective. So unless you're looking at the monthly chart, you know, you're going to have a tendency to get a lot more negative than you would if you have that monthly chart in front of you and you're looking at it. You know, we had some gyrations before. And those gyrations back in the 2011, 2012 period were the last major gyrations that we had. And then we went off from about the, you know, spring of 2012 all the way up until the spring of 2015. So 3 years now of pretty much uninterrupted up. There was a little bit of a pullback here, and then there was that October scare. But other than that, it's been pretty much up the whole way. Nothing more than 2-3% at most pullbacks along the way. This amounted to about 9% on the S&P. This amounted to about 5%. And back before that, you know, you had about 6 or 7 in here, and then of course back here you had a lot more. But that was the last major correction, way back in 2011. So 4 years now without any significant correction. Now, does that mean it's going to correct? No, it doesn't. What's the trend? The trend is up, right? And until this flattens out enough and we actually get something different, you know, you have to respect that the trend continues to be up. What's going to happen at some point, though, is you're going to get a threat of one of these lows, just like we got a threat of it on that push down in October, which was quickly reversed. This one was never threatened. Neither was that one. Neither was this one. The only one that really got threatened over the last 5 years was way back the 2010 low when we did that pullback in 2011. So folks, it's been 5 years since we even threatened to change trend on the long-term time frame. Can it happen? Sure, if those things that we just looked at start to play out. In other words, if these swing point lows get broken, you know, then it's going to get a lot more interesting. If this trades down into this area, well, it's a lot different because more than likely in 1 month it's not going to come all the way back to here. I mean, that price point is like 1810, and right now we're trading at 2061. So you'd have to drop, what is that? Let me get the number on it. 1820. So 1820, we're trading at 2061. You'd have to drop 240 points. You'd have to drop over 12%, 13% to get back to this low. And that's just to get to it, to threaten it. In other words, trend can't change unless you break a swing point low, right? You can't change down unless you break a low. And we're 240 or 13% away from that low. That's going to take a while to probably break. So the long-term trend still has to be viewed as long-term up, not down. But as always, the thing to watch is not just the long term, but to concentrate on the intermediate term, because this is where you'll get your heads up before it happens. And if we look at that, right, the setup is starting to set up again for potentially some damage. And how does that work? Well, the way it works is that when the market starts to flatten out, right? And right now, you know, you got some flattening out here, and then you got the October scare that was trying to break them. But yet it didn't break there. It only broke this one, right? It only got under that one, and then it turned and went right back up. So you got a little bit of a scare. You got to reset to allow it to go multiple months again. Those MTTFs are, you know, they're not extended yet. They're still under, slightly under 50%. But if we go another 4-8 weeks and we're hanging in this area, then these are threatened. The MTTFs are you know, longer in the tooth, so to speak, and that monthly starts to set up a swing point low here and here. You know, flattening it out, you can get some damage. We're a ways away from it. If it's going to happen, it's still a ways to go. But folks, as the structure sets up, you have to be aware of it. That's it for tonight. Have yourself a great one. I'll be with you this week. See you here tomorrow. Take care, and I'll see you then. Good night.